Good afternoon. George Cavaligos for HFT Bonds. Well, I hope you all joined us for the webinar. You had the chance to look at the webinar last night. TBF carried the day for us today. It was the best way I could see to go through the unemployment number without having a position in the futures. I did try to sell the market as the number was coming out and whiffed. Couldn't hit a bid far enough down to get filled. Talking to Andy Hubers, who some of you guys know, he's an old Wall Street pro. He's also been a CTA. He's currently brokering and market making in the corporate bond market. He told me about a neat trick, and I should have known about this after being in the market for 30 darn years. Use a sell stop limit. Take a look at his weekly pivot. I think I posted it in the room this morning pretty early. 133.08 was his weekly pivot on the 10-year. I forgot what it was in the bonds, but same idea. Take a look. He goes, take a look at the weekly pivot. Put a stop at the pivot with a limit on it. So in this case, say 133.08 with maybe a 133.07 limit or a 133.06 limit. Probably would have gotten filled. Odds aren't 100% obviously, because the market was gapping down at that point and only several hundred contracts traded in those prices. So there's no guarantee that you would have got filled, but it is a better way to try and get in on these big numbers when the market's gapping through important levels like weekly pivot numbers. And I'll try to have Andy's numbers obviously before these big events up in the chat room for everybody. It's just one other tool for us to use. Another tool that I should have known better. You guys know about C equals A. As markets correct, they often go up in C equals A patterns. And Ali pointed this out to me a while ago, actually, a couple weeks ago. When a market's in a bearish trend and we start to get corrective patterns, we'll often fall short of exactly hitting C equals A. What Ali uses is the fib extensions of the A wave. And his favorite is the 618 retracement of the A wave. Well, or the 618 extension of the A wave. So if the market went down, we're bouncing back up and we're correcting. The market goes up, comes back off a bit, and then starts to rally again. What he looks at is, instead of the C wave, A, B, C, what he looks at is the C wave being 618, the length of the A wave, to start looking for shorting opportunities. Of course, this afternoon's rally, after I talked to Ali about this, unfortunately he wasn't in the room today, he's still having connection issues, but we emailed each other back and forth. We talked a little bit about it. He mentioned that the volume on the rally was weak. He also pointed to the 618 extension. I think both 10-year and bonds met the 618 retracement. I think the 10-year went a little bit above it. Didn't quite get to that 04 plus level. I think it went to 03. I probably should have been scaling into a short at that point. A little bit under the weather, not feeling great, letting stuff slip by. It's fine. I don't have a problem with that. I had a good trade on the TBF. That's still working for us. I think that's going to be a real good trade over the next couple weeks, maybe the next week, if things keep happening, the way it's unfolding now. So I felt comfortable that at least I had a position on via the TBF. I've got the GDXJ position on. I added to that today at the wrong time. Everybody was, that I talked to, I think I pointed it out in the chat. There's a big option expiry in the gold on Tuesday, and a lot of people own these upside calls, and it's limiting the upside potential until that option expiry comes along Tuesday, and hopefully at that point we'll be able to get some kind of a decent gain on these mining stocks. Gary Fullett has another gentleman in his room. I believe his name is Steve Ord. He had put up a real nice presentation showing how long-term the metals mining stocks are building a bottom that 3 of the last 4 times have produced gains on average of about 100%, which is a pretty good odds. I only added a little bit to my GDX position. I'm still up on that trade. I'm just, with today's buys near the highs, my average is obviously not as good as it was 2 Fridays ago on the FOMC meeting when I initially bought that trade. So that's it. Oh, what else? I wanted to talk about. What else was I looking at today that I wanted to talk about? I'm completely gassed right now and I can't remember what it was. Well, alright guys, have a great weekend. I'll try and get some rest, take it easy this weekend. Next week, like I said in the chat, Monday is a bank holiday in Japan, Canada, and the US. There's no data in the US. Volumes will be low. I'm fully expecting a bounce in the market. Equities are closing weak. That's the other thing I wanted to talk to you about. Focus on the market that you're trading more than the outside markets. I let myself get roped into focusing on a lot of these outside markets that are correcting today. The dollar index made new lows in a 5-wave structure off of the recent highs. It should bounce. It's bouncing. Every other market's correcting, but the bonds and notes didn't correct. And I kept looking for more of a correction in the bonds and notes, prompted by the correction in the dollar index, prompted by the corrections in crude oil, gold, equities. Every other risk-on market is correcting, down today, and the bonds couldn't get off the mat. Now, I let that lull me into a sense of we're going to get a higher high. Just got to focus on the market that we're involved in and keep a wary eye on the other markets, but not to the extent that I did today. All right, a lot of mea culpas in there today. The main one being not feeling totally up to snuff and having the TBF trade and feeling a little comfortable and not worried once the market traded. I did not maximize our trade today. Monday, I think we'll get a bounce still. We shall see what the quiet Monday brings. Equities aren't going to close well, it looks like. All the currencies have come off their highs. Gold's drifting back down towards its lows. The dollar index is drifting back up. So I think we could see a little bit better of a bounce once we got through the weekend. Friday selling in the treasuries. Tuesday starts the auctions, but it starts with the 3-year auction. So let's say the market bounces Monday and Tuesday, and then once we get through the 3-year, the dealers start to back the market up again for the 10-year and the 30-year. That's the plan right now. We'll see what happens over the weekend and coming into Monday. Have a great weekend, guys. Thanks a lot.